This is Justin Pulitzer. This is my weekend review video for Sunday, December 11th, 2016. Good amount to cover. The overall, theme of this video is going to be trading along the line of least resistance, surmising underlying conditions, and realizing that your best allies are people who are wrong as well as the trend. Anyhow, the market, as we know, has been going up. It's been fairly strong, and a lot of it has come on the back of the election of Donald Trump to the presidency. I think a lot of people missed that news reporters are not traders, and they all tend to be a little bit more liberal in their upbringing. I don't really want to get into political ideologies, but I'll say this, that I think the news media allowed their political ideology to get in front of some plain facts. The fact being, Trump represents tax cuts, repatriation, regulations being rolled back, a real attempt at growing GDP, basically making America more competitive, and, of course, potentially fixing the failing healthcare system. All of those components are bullish, positive for share price. So that is really the reason why I was pro the market on Trump's election, and I think a lot of the media doesn't understand that this whole globalist movement has been failing, and you're seeing that over and over again. You saw it in England with Brexit. You saw it again with the election of Trump, again with the Italian referendum. I suspect we're going to see it again in the French elections and probably again in the German elections. So this whole, take from the wealthy and redistribute to the less wealthy has not been working the way I guess the elites would have liked to have seen it, and you're going back to this sort of grassroots nationalist, grow the economy, and a rising tide lifts all boats type of situation. Whether or not you believe in that or not is your own business, but the market right now, and that's really what matters, is liking it, is digging it. So you can kind of dig in heels on ideological beliefs and either not make money or lose money, or go with the flow of the stock market. And I find that when you're trading and you're kind of in the zone, you're trading along the line of least resistance, and that has been higher. Anyhow, we have a Fed meeting this week. It's all but a certainty that they will be hiking interest rates. This is the CME website, and we are at almost 95% probability of a rate hike. So that is pretty much baked into the cake. The question, and this is really why I think the market had a tumble last year when they did their rate hike, is based on their projections for future rate hikes, the proverbial dot plots. Now, I think that the market will be okay if the Fed doesn't get too aggressive. Last year they said they were looking to do 4. If they come in at 2 or less, I think the market will be able to stomach that. If it is more than 2, then I don't think things are going to go down so well. February, you can see a very low probability of a third hike. March, very low probability. May, again, starting to pick up a bit, but still pretty low. June, same business. We're starting to get a little higher, but still well under 50%. July, same thing in the 43s. September, 41s. November, 40s. So if the Fed can kind of cool its heels, I think all will be okay. Does that mean there can't be a knee-jerk reaction down in the market? Of course not. It's very possible. The fact that we're rallying hard into the Fed is a little bit more concerning to me, given the setup. I usually like when we are lower into the Fed. The good news, like I said, though, is that the move is basically well known. It's a 95% probability. There will not be a surprise that the Fed is raising interest rates. Based on the Fed's last meeting, They talked about the GDP risk being lower to the downside, foreign risk being to the downside. I'm imagining that won't change now with Italy. The employment risk being to the upside, although these employment numbers that have been coming in have been of the part-time fashion. They have, and year over year, wage growth is actually lower, hours worked is lower. Not a very pretty picture. They said that the outlook for inflation is balanced. I'm curious to hear what they say with that. If they start getting worried about inflation, that could start getting the market not so roiled. That's the term they like to use, roiled. They said that the outlook to the economy was balanced to lower. That's going to be important. And they talked about there was a bit of a pickup in business investment. I expect that to start improving quite a bit under Trump, given the conditions with the repatriation. So I'm curious to see what they have to say about that. I will be doing a live Periscope broadcast on Wednesday after the market closed to give you my take on the Fed. Anyhow, let's get into the internals of the situation and some things that I see setting up. Anyhow, with regard to the VIX, it's pretty low. We're at the lower end of the range. You actually saw something unique happen this week, and I think this was basically a function of where we were in the range. And that was, as the market was rallying, you saw the VIX rallying a little bit. So what does that mean? Does it mean that things are bearish? Does it mean that the world is ending? It's a little bit of a cautionary sign to me, but I'll say this. It could mean a couple of things. When you're at the low end of range, it could be outright shorts, putting on cheap bets. It could also be longs hedging. When volatility is cheap, people like to buy insurance. Or it could also have been call buying, meaning most people think that the VIX can only go up when puts are being bought. That's a misnomer. In, I guess, more extreme market conditions, there could be a frenzy of call buying that's sufficient enough that could actually raise the price of volatility. I had asked a question on what people had thought. It seems to me like the market to me seems a bit bullish. You had a really large MOC flip, which is the market on close orders. That's one type of institutional order. It had gone from like 900 million to sell to 1.2 billion to buy. That doesn't exactly strike me as people fearing and fleeing in panic. So I think it was a combination of probably call buying and hedging, and maybe a combination also with the outright putting on of short bets. One thing that's amazed me is that the market has been making all-time highs, and I see people doubling down on or adding to shorts almost as if they had profits. If you've watched me before, and if you haven't, welcome. You are now being initiated. I am not of the persuasion of adding to losing positions. I only add to winners. And you have people who are very stubborn, mostly ideological, adding to shorts as if they had winners, which is a way of trading that is not custom to me. It's very alien, actually. So, like I said, when you have a market, you have underlying conditions, which means that things are improving. And you also have another thing of helping, which is people who are wrong, on the wrong side of the trade. And you've had a lot of people who have been caught on the wrong side of the trade, of the ideological persuasion, of the technical persuasion, of who cares, right? They're wrong. So that's basically what's been fueling a lot of this move in the markets. So we got that out of the way. Anyhow, VIX at the lower end of range. You know what that means. Purely directional options play. Long calls, long puts, long call spreads, long put spreads. I don't really want to be selling out of the money premium when IV is cheap. I like to sell it when it's spiked on, fear. Anyhow, I wouldn't be surprised to see this come up a little bit, particularly into the Fed. I'm not going to be doing, I don't think, that much trading other than sort of babysitting existing positions, maybe some in and out quickies, but I don't want to get too aggressive here in front of the Fed. I'd like to see how the market kind of trades. If you've, again, been following me for a while, I often like to not do too much trading on Fed days. I like to wait and see what the Fed day range is, and inside that range, I'm not interested. Below it, I am inclined to be short. Above it, I'm inclined to be long. So I sort of use the Fed day range almost like an earnings day range, and I like to be long above the high and short below the low. And inside, it's just sort of twiddle your thumbs and, I don't know, answer emails and do chart work. So that's my take. I'm probably not going to be getting too aggressive ahead of the Fed. Anyhow, that being said, let's go into the keys here more in depth. The dollar. So the dollar is in pretty strong mode here. We're kind of correcting and rallying. We're almost at the highs here. I think the DX chart might be a little bit more telling at the moment. Let's zoom in. Let's see if I'm getting a little better at this since the chart change. We've pulled back, had a reversal, kind of a look below range and fail back up. I've shown on some charts, and I'll try and do this on a longer term, 20-year, maybe weekly, that we basically just got up to the high end of range, which is the 61.8 of 61.8% Fibonacci retracement of the dollar. I guess we could take out the 38.2 since we are way beyond that at this point. So we got close, and now we backed off. We've consolidated. So I don't think it's going to be as big of a resistance as it would have been as if we would have came up and got it fully on this first move. There's a couple of ways you can project a move up higher in the dollar from here, and the one I like is doubling the consolidation range, which would take us up to almost 109. Oddly, I do think that could be in the cards, considering this is looking like a W pattern. So the ideal scenario, and I don't know if we're going to get this, would be for this to rally up strong ahead of the Fed, get above the range, and then that could mark some kind of a pullback point. I'm sort of thinking with the dollar and the bonds that they're going to maybe do the opposite on the Fed, because I don't think the Fed is going to be very hawkish. Now, I'll change that view if they are hawkish, but I'm thinking that they may hike rates and then sort of, I don't want to say walk it back, but I don't think that they're going to be too aggressive on the outlook. It really wouldn't behoove them to be. There's really no need, but we'll see. We'll see how that plays out. Anyhow, I was sort of looking for the dollar to top out a little in that scenario, but I will say this, now that we're consolidating in this range, this is, still have to get a little better at this. If this were to just consolidate the next couple days and then break on the Fed, this could go to the 109 pretty quickly. If we can't and we get below the 10-day and the 20-day, and we start coming back below this consolidation area, I don't even need to use the full range, but I like this low, this 100.71 to like 160 area. Then I think the trade could be lower. I often talk about rallying ahead of the big support. Notice this stopped ahead of the 50 MA, so the slingshot being cocked is again kind of half-ish. See here, you got a real good press down, and that's what catapulted it. So here we didn't really get the full press down, so I'm thinking that this could maybe not be as powerful as it may have been. Anyway, that's my story on the dollar. If we break the range high, I would think long. It probably has a bit more to run. If we start getting back below like halfway in this area, in this consolidation range, these like mid 100s, then I think the trade could be maybe significantly lower. The bonds. So my operating thesis, if you've been watching me for a while, if you're not, you're going to get it now, is I was hoping for a large pullback in bonds ahead of the Fed into the key support to kind of do the opposite. It'll almost be like, instead of sell the news, buy the news. I'm liking the setup. It's looking like it's happening. We got close to the 61.8. It bounced prematurely, and now we're into this area. I've said for a while, and I know a lot of technicians are watching this 114.88 area. I think somewhere between 114.88 and 117.39. This area should be a solid low. These are bonds we're talking about, not tech stocks. This has come down rather hard, rather fast. So my operating thesis is that the bonds, given a benign, assuming a benign outlook with the Fed, meaning the dot plots, meaning 2 or less hikes the next year, this could bottom out on the Fed and set up for a long, because bond buyers don't want to buy ahead of the Fed because they know they're hiking. But if they're not buying ahead, maybe they'll wait, stay their orders. I think there's a lot of pent-up demand to maybe buy it after the fact. So somewhere on this trend line and down into these reference lows, I think we'll set up for a good right or right out long. If this even undercuts it, I'd probably be looking to sell out of the money puts. But I think that area is going to kind of hold in. One of the things I don't know what the heck I just pulled up here. Yeah, that's what we were looking for. HYG. So there's been a lot of put buying in this. I got involved in the short a lot higher when I started seeing it. I talked about covering and then reloading and then covering again. This promptly gapped up, and I said I wanted to trade in the direction past this kind of gap bar. Remember, I talk about earnings days or emotion days. This was clearly a kind of an attempt to change the pattern. Now you have a bit of an inverse head and shoulders. You're making higher lows and higher highs. Not exactly characteristic of a market that is looking for a credit crisis or to fall apart on itself. Anyway, you have 3 days of consolidation here. It'll be 5 days when you get to the Fed. I think that anything above these 3 days will likely, maybe if it's the ideal would be to stay in this range. 3 to 5 days would see the high. A break below there and a loss of the 50 and the 100, I think could negate the pattern and maybe would come back down. You don't really want to be retesting a right shoulder so soon, particularly after making a higher high. This would be a failed breakout and then coming back in. I'll show some other examples of that, but HYG is looking okay. I think a lot of that also has to do with the fact that oil hasn't been losing itself. Wow, oil's up here. I'm really bummed that I didn't do this video a little earlier, because now, of course, no one will believe me that I was going to say I thought the move in oil would be higher, but I did, and I've talked about it in past videos, so I think it's consensus with what I've been saying for a while, and I'll show you why. Remember, I talked about oil having a big inverse head and shoulders and then a failed head and shoulders here. You could see the pattern was negated. You had a bit of a pullback in consolidation, and now you're above the head. The pattern is completely negated. So OPEC, we know, is supposed to be doing the production cut or whatever they're talking about. We have some... I've talked about the 52s, and I had said the new range was 49 to 52s. Anything above 52s, I think, could see the gap fill up to 56.5. Looks like we have a clean break here and could be getting that move. We looked below the channel a little, and now we're firmly back in. Basically double bottomed here, failed head and shoulders, a move higher. That could double the range of the entire move. It's basically a 10-point range, so I've talked about this even potentially seeing 62s, which would be basically back up to here. That's very, very possible, and actually what I think could be in store. Shorter term, anything above 52s has 56s in play. We'll keep it that simple. A lot of people were worried. I had said XLE was not breaking down, that we were in a consolidation funnel. I would imagine this will be higher too now that we're going up. So people were like, oh, oil, they're looking to short oil. I said, what the heck are you doing? We're breaking out of, XLE is not showing that. You could go back to my stream and see what I'm talking about. Any check back, by the way, we now have a consolidation funnel. I often find any check back initially to the backside where it broke out is a buy at the very least for a day trade. I'll keep to that story, but seems like the pattern is going higher. China. So China, all right, I'm getting the hang of it a bit, I think. This had a bit of a breakdown, and now we're back above it. I'll keep it simple. As long as we hold the 50 and 100 MA, I'm fine with long. Anything below there, I'd rather probably be short. I'll keep it that simple. BABA, been a bit of a laggard. It's sort of out of season for BABA. BABA's sort of like a long until singles day, and then it's a GTFO. This just checked back really to close to the breakout. Channel hold. Another kind of channel hold. So so this is the story. I'd like to be long above this last swing high because the pattern I want to start seeing is higher lows and then higher highs. So anything to me above 96.06 to me would be a long, maybe back up to 101. This area was key, 98s, so somewhere between 98s and 101. If you lose this bar here, the low of this, like this sort of bear flag that we're trying to break out of, if you start losing the lows here in the 89s, I don't think that this will hold again. And I think we could be looking at 84s and possibly 78s. So that's the setup that I'm watching with regard to the BABA. IBB hasn't been a pretty situation. I was very bearish up here, remember, with the head and shoulders and the failed check back. This thing fell apart. I mean, this has just been a big bear flag for a while. But there's a couple of setups that I see as being tradable. One would be a break over this downtrend line. If we break that, I think we fill up the triangle quickly to the higher end of the range, probably close to like the 294s to 300s. If you lose this kind of higher low hammer tweezers situation, I think we're going to see the lows and maybe even new lows, because this is a reversal. This would be an attempt here at a higher low, and I think if we lost that, we'd at the very least see these lows and probably the old all-time lows. So I either want to be long on a break of the downtrend, which would be above the 50 and 100 MA, I'm sorry, the 50 and 200 MAs above this trend, or short below these two lows. Very simple, very easy. Some of the things that I had been looking at macro-wise when the market was sort of pulling back were the transports. And I had said that this thing was breaking out. I mean, how do you have a bearish market? I mean, this was like forming a big inverse head and shoulders, a mini inverse head and shoulders, and now the thing is screaming. What are these lines, you might ask? So on a longer-term time frame, I drew in a channel. It spent some time above it. It spent some time below it. I don't know how relevant it's going to be again, but I do know we're close to the old all-time highs, and we've come up from the bottom, so I don't necessarily know that if you need to short transports, but I don't think that I want to be first buying them here. I get it. A lot of people are 2 years maybe? How about 3 years? I get it, we're breaking out, but I think the breakout is a little dubious. You have a bit of a topping tail here. Anything below that low, 169.02, could be a quickie, right or right out short, maybe for a move to the 10-day, maybe the 20-day. Doesn't mean that I'm bearish on the transports, not by a lot. I really don't think I'd get too bearish on transports until it starts breaking like these lows. I'll probably throw a fib on it. If we did a fib, let's just say that this happened to be, and you could draw this from a couple of, I'll do the very big extremes. My problem is to buy it here, you don't have great trade location, and you're a long way from Kansas Toto. It doesn't mean you can't go a little higher, but I do think that a 50% pullback here would be, that's sort of the mash, this is where this broke out from. I'd be interested in buying the dip on some type of a pullback. I don't know if we're going to get something that dramatic. I don't think it would happen very quickly, but I would be a interested buyer on a pullback. If you do it from another fib, you can do it from this low. And I'm not really correcting these. I should probably check, but you get the point. This is basically like a check back to the breakout. I don't know how quickly that's happening, but this could just kind of chop for a while. Look here how long the topping pattern took. But I definitely think that this is probably a good idea to... I had been very bullish on transports, but now I'm looking to kind of book some profits. And that doesn't mean it can't go higher, but the easy money now has been made. JJC, this was another one. I had people telling me how bearish the market was with copper exploding. You're at a volume distribution. Some consolidation would be in order. I mean, here you had it already. I mean, you're starting to have this sideways consolidation. I don't know that this is going to get up to 35s, but I don't know that it won't get up to 35s. But hard to make a bear case. And if this does pull back to the breakout in the 26, somewhere between the 26s, in the 26s, I am definitely all over that for a BTD situation. Some of the other stocks that have been in the Trump rally has been Bank of America. I did a simple fib extension. People have been asking me how to draw these, or the easy way is to sort of do a reverse fib. You take the high, you go to the low, and then you add in the 1.618. I manually add in the 1.272, but we have achieved that high here. So, and I had been talking about this in the videos, the 23s would be the spot to book some profits. One of my other theses here is that this would rally into the Fed, and then the Fed, instead of this, the Fed could be kind of sell the news, because the banks are rallying for two reasons. Really for three reasons. One is business is going to be improving. There could be more demand for money, meaning higher interest rates, plus the Fed hiking rates. Two would be the removal of some regulations. Now that, I don't know how, I know Trump is likely going to do some regulation reform. Maybe the banks get their manhoods back. They could start lending again. But a lot of that has been priced in, and particularly in like stocks like Bank of America, JP Morgan. Look where this has come up from. I mean, in a relatively short period of time. I mean, just since the beginning of November. I mean, this has been really an epic move, and we're getting very vertical here. I would be a buyer on a breakout. I mean, a pullback back down to 17s or 18s. I mean, if this thing got back down to the 15s, this thing would be an absolutely screaming buy situation. But again, do you have good trade location if you're first buying it here? Sure, it could go higher, but I think the easier money, again, has been made, and I do think my operating thesis, and listen, I could flip this if it doesn't plan out, is that this is going to be sell the news type of stuff. JP Morgan, if you draw it from here to the flash crash low, or if you draw it from here to the Jamie Dimon bottom island reversal low, we are way through the 1.618s. This, to me, looks like it could be bowling for par for 100, which would be on a longer term 1.618 fib extension from like the old all-time high, I think, to the crash low would be up there. So I do think JPM could see 100, but again, do you have great trade location first buying it here? My answer is probably not. We're busted through the channel. I'd be a buyer on a pullback to the for at least for a day trade on the backside of the old channel. I think that could be a good trade. But again, it's time to, I think, start booking some profits in these stocks. EOG has been consolidating. This is again, hold on. Let me show you on a longer term chart. I don't need to do it, but on a longer term chart, you can see that there's a channel. We're back up. We did spend some time above there. We're getting there again. Let me zoom in. I'll show you what my trade setup is for this. You have a consolidation range. Anything above the range high, it probably goes a little higher. Anything below these like triple bottom lows, the 10-day MA, I think will come back down into some fib levels. Yeah, that's my take on EOG. Same kind of thing with this Anadarko. I mean, we're basically back to the 50% fib. It hit here, backed off a little, and now is coming back up. I think that this could actually see $80, which was these old supports, but I wouldn't get too hopped up. I'd be more of a seller up here than a buyer. So, let me zoom. I'm just trying to get my sea legs with this thing. You have this swing low. So anything below 66.51 I think would be a short at this point. Anything above this high, above the 71.10, I think could be a move up to the channel high near 80. Very simple. Don't need to overthink it. Caterpillar. Also a pretty bullish pattern. I think 105s could be in the cards, but let's go shorter term. All right, I'm getting a little better at this with the zoom. This was the day where they had the analyst day or whatever, lowered their expectations. Anything above the high of day, the 97.39, I like it long. Anything below 94.05, I like it as a GTFO, meaning get the F out if you're long, or right or right out short. It's also a range low. And I think this would see the 50 MA and probably test to the low end of the gap very quickly in the 89s. JetBlue, finally, I had been bullish this, and now I think it's an area to take some profits. I actually booked it a little bit early near the gap fill, but this did get the full 61.8, promptly backed off here with a topping tail. So for me, it's also the end of a range distribution. This is just volume profile. You could add this in as a studies. You could see, look, it held the lower end of the volume distribution here. Now it got to the high end of the volume distribution. For me, the trade is finito. So I would be an interested buyer if this were to like pull back, maybe to like the breakout here of 1894-ish, somewhere in there. Maybe if it coincides with the 50 MA, I don't know where that would be at the time. But for me, the JetBlue trade is over. Over. All right, let's talk 1.618 Fibonacci extension drawings. I had originally, a couple of weeks ago, drawn it from this high, but I decided to do it from this high, all the way down to this low. If you do that range extension, you're talking about 234.03. I had originally, from this high here to this low, it's about 230. If you do it from this recent range here to here, you get this 1.618 Fibonacci extension at 226.53. Look where Friday's close was, 226.53. Is that a coincidence or providence? You tell me. So we've got the 1.618 of this range, this entire range here, from the pre-high to this Trump low. So what's the story? Is this a short? Should you be selling? I mean, what's going on here? My answer is you should definitely be booking some profits, in my opinion. I don't necessarily know if it's a short, though, for a couple of reasons. One is, look what happened when this got the channel high. You had this long-term begrudging area, and I'll tell you, if you bought puts in here, I'm sure you weren't happy. This could have a little bit more up to the channel high, and then this thing could just kind of coast all the way up to this 1.618. So it could take a while. Options are cheap. I'm fine with buying some put spreads. I wouldn't load up the barn, but if you want to try shorting the channel high, I can't disagree, considering we came up from the bottom. I think that there would be, at the very least, a day trade and maybe some kind of pullback. I would love to see a pullback. We already kind of had the retest of the breakout, though, right? I mean, we broke out, pulled back, and then the market's doing everything right. So hard to get too bearish here. Still in kind of a buy the dips mode. You know, you have year end. A lot of portfolio managers have missed this, and they are playing catch up. People aren't buying like this because they bought well. They buy because they're covering or they're chasing. So I do think that there could be a little bit more of an overshoot past this to the channel high, but I'm starting to be in more book the profits mode. I still like buying dips, but I don't like chasing. The expected move this week, by the way, is about $3.28, which seems a little low, but that would take you up to 229.79, which would be roughly higher than the channel. So we'll see. The move down would be to 223s, which is a little bit above the 1.272. Makes sense. It's about halfway of this breakout bar. I don't really see the market is getting a little bit extended away from the 20 MA, or about $66, which is a little extended. And the 10-day is a little bit below, but it's hard to get really too crazily bearish about anything until you're below any of the major moving averages. So I do think that the futures, by the way, opened up higher in after hours. I think that they were about $10 higher the last time I had checked. So the good news and the bad news. One is we had a bit of a rich close on Friday. that was sort of the bad news. And the fact that we gapped higher. So market tops don't tend to happen in after overnight sessions. They happen in regular trading hours. So we're going to have to see where we open up tomorrow. If you can't take out the overnight high in the opening, I don't know, 15 minutes to an hour, there could be a bit of a liquidation break and a pullback in the market. However, you really need to see a new high during RTH, regular trading hours, for it to be quote-unquote a good high and something that I think shorts could really sink their teeth into for a more extended move. So that's the good news. The market probably has higher to go. It may not be Monday, it may not be Tuesday, but it probably will be at some point before there's, the kind of the end of the move. And I do think we are going to see the channel high here. So that's the SPY. IWM. Why is IWM rallying so hard? Really quite simple. More domestic growth, business, technical patterns, inverse head and shoulders, a breakout over highs. We got a 1.618 fib of this range, and that didn't hold it. And now we're at the 1.272 of this larger range here. And we're at a channel high, a bit of a topping tail, so this could be a bit of an inflection point. But again, look at this, how this just kind of ground higher. We could, believe it or not, do that to 151. That would be one of the most insane moves I've ever seen, but it could actually take place. However, we are at the channel high. I like the idea of booking some profits. We've come up from the bottom. And by the way, I was talking about shorting this thing for a move to range low. We talked about this, and this thing has just been off to the races. But I do think that this thing is probably going to stay high for a while. Could do some pullback, could even come to the middle of the range, could even retest breakout points. But it seems as though this is just epic, really, very impressive. Honestly, as crazy as this sounds, you could even come retest the channel low again and still be pretty bullish because, look, you're over all of this. I mean, everyone who's been short IWM is wrong forever. This is all-time highs. Very impressive. We got my 138s, which I had talked about. I had said that I thought we'd see the 1.618, but also talked about seeing the channel high. So I think, for example, I don't know how the futures are going to open up actually RTH on Monday, and that was just an epic fail with the drawing. This might be a little better. You can see I had this circle drawn in. I think we could remove it now since we're there. A little bit of a doji. If we were to open up on a gap basis below 137.75, I think you could probably short it for a quick move. I don't know how far we would go, but maybe to the 20 MA. So that's my thinking. But I will caution that this could do this kind of this grinding move for a while. So yeah, that's the story with IWM. Expected move is $4 this week. So up to 141.30 or down to 135.32. Qs. Got to take our P's and Qs. So the Qs have been the laggard. I know a lot of people have been very bearish on the Qs, but I had said we haven't really created any technical damage. We're above the box. We're above this range here. And we never even got to check back to trend. That said, if this really gets in gear, this could put the market into blow-off overdrive. If you go to we could see the 124s rather easily. It makes sense to me also if you're going to kind of do the doubling or so of the range. I mean, this easily could see this. So if we can break out over 119.66, it seems to me like this might want to go. I think Apple is showing a little bit of its hand. By the way, the expected move in Qs this week is not that much. It's $1.88, 121.38, 117.62. If there were a failure, by the way, here, I mean, I'm just thinking trend and lower end of range, considering we're just ping-ponging back and forth. I guess the trend is, the trend would be sideways, and it is until it's broken, and that's it. You trade you sell the top end of the range, you buy the low end of the range. If it breaks out, then, you play for a move up. Apple. I actually got long Apple. I hate to admit this, but I did jump the gun a little bit on this day. I had drawn in a Head and Shoulders, and I talked about the stock being vulnerable until it broke the Head and Shoulders. The right shoulder is negated now, so I would say the pattern is snapped. Let's remove this so we can talk about where we might be going. So this day I kind of, it had a bit of a look above. It didn't close. I actually bought this on a pullback. Luckily it worked and we're above the breakout. Anything above 112.39 to me is a long. If it gets back below there, it's a GTFO. That means this was a look above and fail. But we seem to be in a pattern up, and I do think that this does want to fill this gap to 118.25. I'll reassess where I think we can go from there, but I do think that it wants to fill this gap at some point. At the very least, I think it wants to see the 115s at least test into the gap. So that's my thinking with Apple, and if Apple can really get going, that would be wouldn't be bearish, right? Wouldn't be bearish at all. Amazon. This broke the trend, but it hasn't been doing very much. Higher low, I need to see a higher high. Can I get a higher high? I need to see it over 792.40 to form the W, and then I think it would come back to up probably to fill this gap at the very least to 818s. So anything below the 50 to me still remains vulnerable. If it can break the 50, then we're back in bull market mode. Facebook. The stock has a lot of technical problems. It is trying to form a W, and I'll propose to you that Facebook could even rally, could even fill the gap and still be bearish because it broke the channel, and this could like come up to fill the gap and then be a short at the kind of at the gap fill, like if it were to do it quickly. We're still below the 200 MA, which is a little disconcerting. We had a weekly close below the 50-week MA. We're back above it. You have double lows here. If you lose these lows, good night, Gracie. I think the stock would kind of double this range that we're in. And back to the downside, at the very least, get the 108s. Potentially even lower. 106s were a big level for Facebook. So for me, I don't currently have a position. I haven't been in Facebook for 128s and 130s. It got 133s. I was sort of bummed that I missed out on the last $3.50, but if you kind of followed my guidance on that, you're probably happy you did. This was a gap below and it's really been acting very shabbily. My beef with Facebook is that they lowered their growth forecast. They have all this fake news concern. I think the fake news concern is a bunch of hullabaloo, personally, but whatever. I'm more concerned with their lowering their ad metrics kind of stance. It was really a guide down. So until that is repaired, until they kind of prove it, I'm not so inclined to be bullish on Facebook. I mean, the stock could have, I don't know if it peaked, but it could be in for a larger pullback. If it could break the downtrend, this is sort of like a bear wedge we're forming. I've heard some other analysis on this, but I tend to and go with mine. This, I think, could even rally, like I said, if we break the wedge, I think it sees the 50 MA and probably tests into the gap. Maybe it fills the gap, but I would be a buyer on a break of the wedge. Until there, I think you could even try a right or right out short. I mean, look where the wedge high is. It's right where this reference high is, the 120.79. I like that for a right or right out short if this continues up. And if it breaks, just cover or flip long, for a move back up to the 124, 125. But the stock has a lot of technical damage. A loss of these double bottom lows is an absolute right or right out short. And that's my story with Facebook, and I'm sticking to it. I really am a little concerned. I'll tell you, if they have another cruddy quarter with lowering their outlook, this stock is going to be down a heck of a lot more than just this. I'll tell you that. So the next quarter is going to be really, really important for the people over in Menlo Park. So that's where Facebook is based out of, by the way. I'm trying to impress you guys any way I can. 1, 2, 3 tops. I don't know how much longer this will hold. Usually the 5th touch is a charm. I don't know, but Netflix seems to be one that wants to go higher. I like the idea. The 50 MA was very key here. Any pullbacks to the 50 MA I like as a buy. You really need to clear these 129s, though, in my view, to really rock it up. So anything below 129, I'm sort of loath to be a new money buyer. But I do think that this stock is likely to be destined for higher. I like buying trend touches until they don't work. The Google. So, looks like the pattern is trying to maybe repair itself. We have some higher lows and now higher highs. However, we are back into kind of breakdown levels, resistance. Old reference highs. The 810s, I don't need this here anymore. Let me just get rid of this. Oh, no, those I want to keep. 810.35, basically there. So, I don't know. Maybe you get up to 820. Pattern seems like it's reversing. This was the big emotion bar. You really need to clear 810.06. Once you clear there, I think that you can safely say that the pattern has really reversed and you could start buying dips again in Google. So that, to me, looks like it's repairing a bit. I, however, like shorting channel highs and buying channel lows. We never quite got there here with this. But the pattern does, to me, look like, I'll keep it simple. Anything above the 50 MA, look, this is where it was holding. It broke down from there, so I'm okay with being long on 50 MA tests or anything above the 50. If it gets below there, it's a get the F out. I almost slipped. And or right out short. Fine line we walk over here. NVIDIA. Jeez Louise. I talked about a right out short on a break of the 10-day. People often ask if I day trade or whatever. This got the 20 immediately, so I talked about it in real time as a cover. Prescient, got a high, but this was a bit of a look above and fail. So, what's the scoop? Anything below 93.05, or if you want to give it a little more slack, 94.27 could be a right out short. Anything back above there, I would be more inclined to be long. We're still holding the 20 MA. I would assume the 20 MA holds. If you lose the 20 MA, then I think maybe we come back down and retest close to the 50 MA, which would be the lower end of range, which would also be the backside of this channel. Remember, I talk about backsides of channels being support here. If we lose it and we come to here, I would say that a 50 MA touch and a reference low, a 50 MA touch, and a backside of a channel would be a good right out buy. If you're trying short, you could try a put spread or ratio or whatever. 50 MA was a lot of support before. This would be the first 50 MA test in quite a while. I think there would be some very interested buyers, and keep in mind it's still from a higher high. I wouldn't be as inclined to buy this if we were to like have rallied up here and not pierced this, because we'd be coming from a lower high, and to me that starts looking like topping patterns. But the fact that we did get a higher high, I am inclined to be a buyer on the 50 MA. LULU, the lemon. I'm a little dubious about this rally. I know a lot of people are excited. This came up from the lower end of the range. It was a breakout. It's backing off a bit. I think as long as this pulls back but still holds the 200 MA, it's okay. We got the 61.8. You got to test into the gap. You really need to clear the earnings gap high of day, which was 72.70. I want to just see something. I'm going to give you guys a little bit of a look behind the guy behind the guy, if you're a Swingers fan. 72.70. That was the, let me see. Let me do 3 days, maybe. Let's just do 5 days, 5 minutes. Yeah, 72.70. You need to clear that. If you can clear that, the stock will go higher. It'll probably fill the gap. That's probably what's going to happen, but I don't know that we're not going to pull back first. Before I can advance, I have to first know that I'm not going to have to retreat. Doesn't that sound cool? If you lose this, this was the kind of pullback day. you want to write or write out above 69.71, I think you could play a little long. Below the low, 68.25, I think you could play short to the 200. You have this 100 and 200 day moving average confluence. Look where the gap was here. This was below the 100, so I think that the 100 now should be support again. So this could drift. If it does, then the 100 MA to me would be the write or write out play. Camping World, this is one JP was bullish on, right? I talked about the doubling the range. This exceeded even my wildest expectations. I'm not suggesting piling in and buying, but I like buying the trend for a write or write out play, for a bounce play. But I do like booking profits if you took this trade with me on the break of the range for the doubling of the range. No trade in there anymore for me, but the stock is pretty bullish. Congratulations to Marcus Lemonis. Successful IPO. I like that. ZOES. This was one that was brought up to me by someone who follows me, who I talk to often on the DMs. And she brought this to my attention. I like that we are, this was a bit of a look above and fail, but now we're above this consolidation range and above this big emotion day. Anything to me above 25.85 is a long. We have a little 100 MA. This is where the breakdown took place from, so we really need to see it clear the 100. If it can clear and hold the 100, I think we're going to come up and retest 31.80. I don't know if we're going to get the full gap fill, but you have a 200 MA coming there. I wouldn't be surprised to see it at the very least test to the gap. New name for me. 25.85 plus is a long. Back below is a get the F out. If this goes back below 25.72, really get the F out. No reason to be involved. I'll end on WYNN. So I had talked about this as a long play. Where was it? I forgot where it was. It was around 90. Was this it? I don't remember where the entry was, but I had talked about it, and I had said that this was going to go to 103, and it promptly did. It pulled back pretty aggressively, and it did actually get up to 104.90. I think it was around here. Yeah, this was it. This was the day. It had to be the day. Because you broke the 50, you pulled back, and this was it. Above the highs, and I talked about it was 98s, I thought we'd see 103, and the stop was below the low, 96. Yeah, this was the day. So we got the move. It actually pulled back. It got even more. Here's your problem. This pulled back very nastily. So you have an opportunity here of being an inverse head and shoulders, but I don't know that it is. If you lose this emotional day, this big day, you had a bounce, and a lot of people were asking me, do you buy the dip? I said, no, you want to short the bounce, and that turned out to be pressure. And if you lose these two-day lows, this $90, I think we see 82s again pretty quickly. If you're short, above 96.49 is really where you want to stop. If you're short, you trail down the low. I mean, no one is going to give this whole bar. I mean, no, not I. I wouldn't give this whole bar as a stop. You trail it down. So 96.49, anything above 96.49, I think could kind of rally back up. But anything below these two-day lows is, again, still a short. Anyway, that's my story. I'm sticking to it. I think we're a little long in the tooth on the video here. If you like my video, hit the thumbs up. Please leave some comments. Your comments and feedback help me make the videos better, so help me help you. If you're not following me on Twitter, my handle is @JustinPulitzer. I highly suggest following me on there. Let's have a good trading week. I will be back at you after the Fed decision on Wednesday. Cheers.